Tesla's up 2.5% today, and we hit 204 like we were talking about in yesterday's video. And the Fed came out, said that they're going to hold rates steady, which is what we expected. But what people were really looking for was the potential for a December rate hike. And we didn't talk about that. Jerome Powell didn't really go over it. He said he wasn't even going to be expecting it, and that the committee, even, once the minutes were going to be released, the committee wasn't even thinking about potentially raising rates. The other thing that he did say was they weren't even thinking about potentially lowering rates going into next year. He said that the thought of lowering rates going into next year is non-existent, and that at this exact meeting, they didn't really plan for December. So there's still a lot in the air. No real new news came out. This is basically everything that people were expecting. But in this type of market, especially after we've sold off so much, no bad news is basically good news. But I called this out, and we were talking about this on my Twitter and in our Discord community, which both are free. You can go follow us over there to get our trades. As well, in the Discord, you'll get access to all of our courses and much more. It's over 12,000 members there. But 2 hours ago, I posted solid put position is setting up here. Golden pocket and golden zone rejection area on the 1 hour. Fair value gap to the downside at 202. Order block sitting at 205 to 212. This setup works out 85% of the time. And I currently did end up entering puts today. Now, if you're somebody who is not a shorter term trader, you probably watch some of my videos and you're like, dude, one day you're bullish, one day you're bearish, one day you're bullish, one day you're bearish. It's called trading, right? I have a trader's mindset and I do trade full time while also being a long-term investor. I still believe with the thesis that we gave last week. If you want to go watch the longer term thesis video, and I will do an update this weekend, probably on Thursday or Friday, we believe that we're probably going to see max a push up to $220, absolute max back up to $240. But I still think that Tesla in the next couple of months, even with a good and green November, most likely, I think that there's a chance that we could see the move back down to 180 or even lower. But I did take a one put position today, and we're going to talk about another potential put position up here. And my goal is to, number one, give you guys an understanding of how things are kind of setting up right now, but also number two, how I manage my risk and how I plan out a position. So we said the past couple of days that we believe that we're going to see Tesla potentially move back up to max around $220. And yesterday we had calls, which we ended up closing out. Today, you can see that we had this break of structure earlier in the week. Coming down here, breaking 205, breaking under 200 was not a good sign. Once this break of structure came through with a bunch of selling pressure, we were talking about last week, or the beginning of this week, the potential rebound to 204. That was my target. I was calling that out on Twitter, and I plan to hold my calls, which I didn't end up holding to 200 or 204. I closed them yesterday at 202, but 204 was one of our target levels, because this, if we were to take our Fibonacci retracement, we were to draw that out from body to body, you'll see that our golden zone Fibonacci level, or our golden pocket, is basically between 204 and 205.70. This is a really good time to go short, even if you don't have a couple of the other things that we're going to be talking about set up right now. Even this fib pool gives you a really good potential return. Back down to 194 is close to about a 6% move to the downside, with your loss being about 1.27%, which is really solid. Now, if we look at this actual break of structure, and we're looking at our smart money concepts indicator as well, which I talk a lot about on this channel, you can just go to indicators, type smart money concepts, and it's going to be this one by Lux Algo. This is going to show you where the fair value gaps are, which we have one here. But more importantly, it's going to show you guys break of structure, change of character, which is basically changing of market structure. And then it's going to show you these unusual or big order blocks that are coming in up here. So as we are sitting here in a bearish position that works out, you can see up at the top right, my script, 229 winning trades at about 300 trades, 70 were losses. So very, very high win rate. And we have a good RVR at this point. Traditionally, the stop loss on this type of setup would be all the way up here at about 216.85. So if we were to enter right around here, set the stop loss up at 216.85, and set the take profit down here at 193.69, we have a 1.2 RVR, which is absolutely insane with this type of win rate. When you think about it, if we have 229 wins, 229 times, let's just say, an average return of $1,000, and then we have 70 losses with an average return of $1,000, or an average loss of $1,000, because we have a 1-to-1 RVR. After taking all of these trades for the past couple of years, you would have made $229,000 in profits, $70,000 in loss, which would give you a net profit of $159,000. And as a trader, that's all we give a shit about. We're not here to look at crystal balls and predict all this stuff. We're looking at probabilities and we're playing out probabilities and patterns over a long period of time, which is why I can come here every single day and say, I've been doing this for 8-9 years, and over X amount of time, this has been the record, because I don't know what's going to happen tomorrow, and I don't care what happens tomorrow. I just know that we have Tesla pushing up into a golden pocket, that we have a pattern that sets up and works 80% plus of the time, and I know that we have a big bearish order block sitting here from 205 to 212. Now, I will say that this is not classically the absolute best time to enter this position. And this is something that as a professional trader or even an investor, you're going to run into for problems from time to time, because there runs the risk of getting in at bad times and not getting your best entry, which will hurt you over time. But there's also the issue of paralysis by analysis, where you end up not taking any positions because you are so worried and caught up about taking the best position. So looking here, if we go from swing high down to swing low, even higher here, you're going to notice that up at around 210 to 214 is probably going to be the absolute best entry for you, even drawing that fib up there. But the best entry would be waiting for up around 212, setting a stop loss up at about 217.59, and then setting a take profit down at 193.64. This would be a little bit better of a trade, but my plan is tomorrow, if we don't reject and pull back down, I'll close the trade out for maybe a $3,000 or $4,000 loss, allow it to ride up to 200, and then from there, I'll re-enter at 200. I do think that we could still see 220 like we've been talking about for the past couple of days, but I do think that ultimately we will eventually see the continued sell-off. If we pull the volume profile up, you guys know that last week we were talking a lot about all of the volume that was sitting down here at this support. When we have a ton of volume sitting on these levels, such as 196 to $200, the chances of a very strong bounce, whether it's a dead cat bounce or not, which a dead cat bounce just means basically we have this very solid sell-off, usually by a bounce back up. The reason it's called a dead cat is because normally the way that a dead cat would bounce, if you were to drop it off of a building, which nobody should be doing, is it wouldn't bounce and it wouldn't hold. It would just kaput, which is the whole point behind it. Now, in most cases, usually we'll end up selling off to a specific point or bouncing to a specific point, which is usually our golden zone Fibonacci level. Depending upon how you like to run it, it's usually the 0.618 fib level. So I do still think that we can see this push back up. If we break over 212 and 215, then the next level is back up to 220 as we stated. And the crazy thing is, if we push up over 220, there actually is a good chance that the gap back up to 240 could happen. So what I'm going to do for now is just play what's in front of me. If there's bearish positions that are setting up that I know I have an 80% plus win rate on, there's no reason I wouldn't take them. My goal as a trader is not to be right every single time. My goal is to make money by taking positions over the long term and playing sequences out over and over and over. Now, I know a lot of people got killed today on the S&P 500, so I want to take some time to briefly look at this as well as QQQ. There's a lot of people on Twitter who were very bearish on the market today. I was not very bearish on the market, but I did take a put position, which I'm going to close for a loss tomorrow. I took that position right when the Fed meeting had just begun at about 2:30. Jerome Powell was getting asked about the yield curve inversion and about bonds, and getting pressed a little bit on how they plan to potentially raise rates in December and how he felt on the economy and the jobs market. And I just overall believed that this was a pretty solid time to potentially go short or get SPY puts, because I just felt like it was overall that we didn't have enough bullish sentiment from him or bullish enthusiasm to actually warrant a push up. And so that's why I do think that there's a chance that tomorrow we could just sell off, because we've seen this in the past couple of Fed decisions where we get one movement on the day of release and then the next day the opposite movement, which we've ceased to see yet. Post-market we're up even higher, but we'll see how the rest of the day pans out, or I'm sorry, the rest of the night pans out. Now, looking at the S&P 500, you're going to see we had this big sell-off from 437.47, which we talked about over the past couple of weeks. And we were saying down here at this support level of like 412 that we thought we were going to see the market bounce because there was so much selling pressure and so much volume sitting down here that there was no way it wasn't going to bounce. This is what's called a high confluent area. I talk about this a lot within my academy and during my private streams because high confluence areas are some of the easiest places to trade, especially if you're somebody who's looking for a potential reversal. The reason for this is that it's an area that a lot of traders are looking at. You can see that if you're somebody who plays smart money concepts, we have a lot of order blocks. So you're watching this. You can see that we also have the volume profiles point of control. And all that are these horizontal gray bars that you see here on the right side of your screen. What they're doing is they're going to show us at what price levels have the most volume. And the whole aspect that we are always looking for is to try to get an idea of what big money's doing, because we know we can't move the market. I equate this a lot to a speeding train, right? When we were kids in Philadelphia, I don't recommend anybody do this. We used to go train hopping. And obviously, if you're hopping onto a train, you have no idea where the train's going. You can make some decisions as to, okay, I see the side of this says R2, so this is Regional Rail 2. I think it's going to 30th Street Station. I'm going to hop on it. I don't recommend you to do that, but you can make some sort of assessment as to where you think the train is going to go. But once you hop on the train and you continue to ride it and you start to see that it's going the opposite direction of where you thought you were going, the only thing that you can do is hop off. You can't change the direction of the actual train. And it's the same situation when it comes to trading. You can give yourself an idea of where you think the market's going to go or where you think a specific trade is going to go, but you have no control at all as to where it's going to end up going. So there's no reason to ever be mad at yourself or get upset about anything when it comes to trading, because at the end of the day, you can't actually move the market. And so in this instance, we have this high confluent area where there's a lot of players who can move the train themselves because there's a lot of volume. It's a high confluent area. We see this big bounce, and now we're watching for this potential rejection. Because normally when we get a significant sell-off like this, we'll recover to about 50%, maybe 61% or 70%. But in most cases from there, we'll usually end up rejecting, which I think is going to be about 426, and moving our way back down to those levels that we had tested before at about 411, back down to $408. If we move over to black box stocks to get a better look at any unusual flows or big buys that came through today on Tesla, SPY, or any other tickers, you're going to notice that it was pretty quiet. And this is another reason why I tend to not trust these types of bounces. Today, our confirmed top bullish flow was on ZM with $210 million. Tesla was nowhere to be found. Bearish flow for the day was Tesla with negative $59 million, and Tesla being the most active puts of the day with an insane 1,960 million, which is absolutely crazy. And so looking at this, I just feel that this push that's currently happening is a very, very weak move. And I think that the max we will see the market continue to run, like we said for SPY, is maybe another 1%, as well as Tesla potentially another 4 or 5%. But of course, if this doesn't happen, we are going to course correct. We're not going to just sit here and take a massive loss or go against the market in an uptrend. But the aspect and the most important thing to understand right here is that we are no longer in an uptrend for Tesla. So I'm not going to be bullish just for the sake of being bullish. But the one thing that is very good to see if you are a bull is the fact that we are trying to hold this level somewhat. What you really need to see here on this weekly chart is a massive push back to 240 and to hold. This would fill that fair value gap, and that would get us right back over this level. But what I think is going to happen is what we've been talking about for a very long time now, is either we're going to just drop down to the 160 or 170 level, which is another 20% move over the next 3 to 4 months, or I think we're going to bounce back up to 240, which I think this is probably more realistic. We could push back up to 240 in November, have an amazing November, and then reject at 240 and drain for the next maybe 3 to 6 months down to 170. But I do still believe that Tesla will hit $170 within the next couple of months. I ultimately hope that that's not the case. I mean, I would love to get some more shares long term, but like I said before, I would rather it move back up to all-time highs. Now, taking a look once again here on these bigger time frames for something like QQQ, same situation here. But look at all of the selling pressure. We have this big area, a point of control on our volume profile. We also have this big block of volume, basically between 357.44 and down here of about 353.62. And so if we can reclaim and continue to hold this level of about 354 to 350, that is most certainly a decent to very good sign, I would say not very good, but a decent sign at least for QQQ and for the market as an overall whole. Now, with that being said as well, we would really also want to see the push back up of over $365. That's where the weekly's point of control is, which is going to be one of the heaviest areas of resistance and support. Now, something to note from a pattern standpoint is that we do actually have a pretty big cup and handle with this resistance level up here at $380. So over the next 3 to 6 months, from a technical standpoint, what we're going to be looking for is either the push back up to all-time highs, which would fulfill this fair value gap back here up to 400, or we're going to be watching the subsequent move and rejection from 354 down to about 310. So in the next 3 months, I would for sure be expecting a 10 to 15% move, which most people will be like, no shit, dude, the market's probably going to move significantly in the next couple of months. But what's more important here is the specific levels that you need to watch. Any level from a big time frame doesn't mean anything unless it's a break over like 375 or the break back below 350. These are like the two levels of interest that we're really watching, because those breaks and holds would give us the massive moves that we're watching overall. Now, the last thing I want to do is talk about AMD, because a lot of people ask me about this, and AMD, after their insane earnings, is actually looking like we could get a pretty big move. You can see here on the weekly chart, same situation kind of as the market with this flag and this big resistance that's happening. One thing to note though, is that we do actually have this really solid move that happened here. If I take my trend line, we have this resistance level that we've been holding in this overall current trend. We have this support level that's currently holding here and trying to hold our overall trend. We ended up bouncing off of 96.24, and all we have to see here is a push up over this resistance level. I know it's not going to be easy to get through, and today, by any stretch of the imagination, was definitely not a confirmation. A confirmation of this potential breakout would be this week's candle closing up over $107.25, and then closing another week, as in next week, up above there. And I think that if that were to happen and we could potentially see some bullish action come into this, some big order blocks maybe coming through at like 100, then I think we could see that move back up to $130.66. But at this moment, it's just not something that I'm going to be watching, because I need confirmation first. I hope this video helped, guys. Thanks for all the support. I'll see you next time. Peace.